it wouldn't shock us that silver's in excess of $100 sometime in the first quarter. Okay. And getting there will be obviously rapid. We're in one of those phases now where silver's not only going to catch up to reality, catch up to what some base metals have done, catch up to gold, it's going to beat gold. It's already been beating gold this year. In fact, silver's up double digits more than gold's up year to date.
There's yearly. We have major breakouts on the yearly and the quarterly saying that this cup and handle is going to be accelerating. This cup and handle suggests 3-digit silver. So it is not too late. We're probably headed up into mid 3-digit.
Silver is entering a moment that could redefine its role in the financial system. After years of being treated as the forgotten metal, it has now broken into an acceleration phase, something that historically has led to dramatic price movements. Unlike gold, which has consistently pushed past its former highs, silver has remained capped near the $50 levels reached in 1980 and 2011. However, that ceiling is now beginning to resemble a floor, as fundamentals, technicals, and monetary realities converge to correct what many perceive as a long-standing market error. The underpricing of silver relative to gold, and even broader commodities, has created a setup where explosive upside is not only possible, but perhaps inevitable. MichaelOliver, a veteran momentum analyst, highlights that silver's breakout patterns are replicating conditions seen in previous surges, pointing to the probability of 3-digit silver in the near term. MikeMaloney, an educator on wealth cycles and sound money, underscores how fiat currencies are steadily losing value, with gold and silver acting as the ultimate defense against debasement. Both perspectives align on one conclusion: silver's move higher is not a question of if, but when. And once the market fully acknowledges decades of mispricing, the move will likely be rapid and shocking. For investors, this is a rare window, an opportunity to secure real value before acceleration takes hold. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Silver has already entered an acceleration phase in its trend. And similar events, technical events like that, and they could be defined, occurred back in '79 on the way to the 1980 high, and also in 2010 on the way to the 2011 high. Now, both of those highs were roughly around $50. So everybody in the world knows, oh, silver's hit a high twice at 50. And if you just stand back a bit and think about it, gold's way above its 2011 high. Even copper right now, on this pullback in copper, is still trading above its 2011 high. Metals like I think I looked at a zinc chart the other day, or was it 10? I forgot. Above its 2011 high, and silver, I guess, is just going to stay below the 1980 high and 2011 high forever. It's a dog. Okay, right. Or something's wrong with the pricing of that market. And we all know, if you've been in markets long enough, some markets can get overpriced vastly and stay there and yet seem so sane. And then when they implode, you say, oh, golly, it was a bubble. Now I understand. That guy was right. The big short guys, remember, they said they were going to collapse. The mortgages finally did collapse. Or a market gets bashed down so low and stays low for so long that people just write it off. Like, it's never coming up. It's mired in mud. It's something's wrong with it. Those can be mistakes, market mistakes. And when a market makes a mistake and finally realizes it's made a pricing mistake, not all markets move rationally, remember, okay? It can often compensate even more so getting back to what it should have done already, okay? And if you factor in such fundamentals as the real value of the underlying money unit, in this case, let's say the dollar, same applies to the euro and the yen and so forth, fiat pieces, nothing backing them, they decay in value every decade dramatically in real buying power because the quantity almost doubles for the dollar, for example, every decade, almost by 90% increase in the supply of dollars. So, like I've probably said this before, when your granddad built a house, it was $4,500 medium home price. Now it's $450,000. Okay, get the point? Another way to express it is quarter of a century ago, same month, September 2000, if you bought the S&P, you're up 3.5-fold right now, okay? If you bought gold, you're up over 11-fold. Or 12-fold by now. It's held its value and stayed ahead of the decaying money unit that we use to measure things, Whereas some things have just barely kept up with it, like the stock market. Even though they look good on the price chart, it really isn't keeping up with the real value of the underlying unit. Well, silver was $50 in 1980. You want to try to compensate for that, for the real decay in the value of the money in it? Would probably be $200, $300 just to match that price in real dollar terms. Now, forget that. That's not a technical, that's just a fact. Silver's been vastly underpriced relative to gold, underpriced versus other metals for too long, and it's waking up. And when it wakes up, it's likely to have a tantrum. And the tantrum has only begun. We thought, based on one or two factors that I could identify, that maybe we'll find some profit-taking resistance in the 60-70 zone after we burst through the 50, run all the buy stops, the latecomers. Frankly, looking at more soberly and looking back in time, measuring this type of move, it wouldn't shock us that silver's in excess of $100 sometime in the first quarter. Okay. And getting there will be obviously rapid. We're in one of those phases now where silver's not only going to catch up to reality, catch up to what some base metals have done, catch up to gold, it's going to beat gold. It's already been beating gold this year. In fact, silver's up double digits more than gold's up year to date. Much of that occurring since April. Gold went into this, sideways, silver went vertical. Anyway, I think we're in an interesting time, and that's one of the factors in markets I'm most focused on personally. Reanalyzing closely the development of that upward process in the late 70s to the 1980 peak, and then also in the bull market that had been going on for a decade in silver up to 2010, and then suddenly it said, that's it, I've had enough. It went straight off the page. It did it in what happened in both those markets, and this is true with other markets as well. It's not just looking back at silver, but when you go into acceleration phases in markets, what you see in the final couple of quarters, and I don't mean that we're going to top at that point. I'm just saying right now, the next couple of quarters is so dramatic that it drops your jaw. And it's not uncommon. In other words, when you get into these phases, and that is fairly uncommon, but it's not uncommon that when you get in those phases, you do what I'm talking about. And in terms of multiple gains, it's merely replicating and getting back to even somewhere near the real dollar value that it has saw in 2011 or certainly 1980. And also, like I said, certain other base metals and gold is well above its 2011. Why is silver the dog? Is it really a dog or is it a mistake? And I'm arguing this is one of these market mistakes that we see. And when they get exploited, they're worth exploiting. Undervalued, huge buy. Overvalued, huge short. And that's what I think silver's in right now. And I think it's going to compensate for it. But it's not going to do it in a way that is leisurely. Where, I'll have to think about this. Don't think too long. It's already said I'm accelerating. And I think the $50 high is a joke right now. That could come out in 48 hours or the next 2-3 weeks or whatever. But in the next handful of months, I think the move up in silver will be so dramatic that people they'll be jaw dropping. Fundamental guy I appreciate very much, Eric Sprott, might call him the king of silver right now. He thinks go to a couple $100 an ounce. And I see no argument against that, frankly, ultimately. I'm just talking in the next couple months. I think, seeing 100 wouldn't shock me. And frankly, once you get into white knuckle flights like that, where a market has made an error for decades, and then somebody says, I'm out of here. It's very hard to make accurate technical predictions. We come up with that plus 100 level simply by replicating certain other phases in those prior bull markets on a ratio scale. But silver's vastly undervalued, as we've said, relative to gold, relative to copper, relative to the commodity complex. It's been mistreated, and that's a major error. There's no fundamental reason for it to have been mistreated. Its supply-demand situation it's remained tight. There's no excess in terms of supply. Supply is barely matching the increasing demand. And one of the unique things about silver on a fundamental basis, and I try not to get into it too much because we're technically based, but much of silver comes out of the ground not from miners that are motivated by the price of silver. They're producing zinc or copper or something else, and silver is a peripheral product. So even if silver went ballistic, it's not a primary motivator for them to pump out more copper and zinc so they can get hold of that silver. You get the point. So most markets, if you take the price of grain up, the wheat farmers are going to make more wheat, or copper, mine more copper. But silver is a unique position where, the silver miners are narrowly focused. They will benefit directly, but they don't produce the bulk of the silver production. comes from copper mines, zinc mines, etc. And so silver's got a real unique fundamental argument going for it as well.
Silver's story is shifting rapidly, and the signals are becoming impossible to ignore. Physical buyers are welcoming dips as opportunities, knowing that paper sellers cannot control a market forever when they cannot deliver real metal. UBS has now raised its silver forecast, openly acknowledging the potential for all-time highs. For a major bank to change its stance so visibly suggests something important. They've likely repositioned, moving from short to long, and are now aligned with the upside. This kind of reversal from the financial establishment is a strong indicator that the tide has turned. Meanwhile, the East is exerting a powerful influence on the market. Silver trades at a premium in China compared to the West, pulling supply steadily eastward. That flow underscores the silver milkshake effect, where the East drains metal as Western supply tightens. Technically, the charts confirm this structural shift. Silver has broken out on both quarterly and yearly timeframes, completing a massive cup and handle pattern that points toward triple-digit potential. This is not just another rally, it's the early phase of something larger. Momentum is building, and with each close above critical levels, silver's case for revaluation strengthens. Let's get back to the interview.
This lower post here, physical buyers are circling. They're not scared of this dip. They're waiting for it because they know a secret. Sellers of paper contracts who can't deliver are playing a dangerously risky game. You can't print physical metal. And then here, UBS raises its forecast and says silver is headed for all-time highs. Now we know which one of these bandits have already covered their shorts. So this is the article about UBS raising their estimates for silver and admitting that it can go to all-time highs. And no big investment bank like this wants to start promoting something until they've changed their position from being short to being long. So UBS is now probably in a position, if they're saying this, they're probably in a position where they can make gains from silver going up instead of having a motive to keep suppressing it. And from Make Gold Great Again, President Xi of China has 3.56% more suck on his silver today than the West. And this is Make Gold Great's silver milkshake theory. I love that. My friend who lives here in Puerto Rico, we used to live just a couple blocks from each other, made up the dollar milkshake theory. So here we have the silver milkshake theory. And if you take a look at this, on the same day, the price of silver was $42.20 in the West, but in China, it was $43.70, 3.56% higher. And that arbitrage causes silver to start moving from west to east. It's not a good thing for the West to have that arbitrage, but that's where the silver is going. And a lot of it's the East that is driving the prices on gold and silver right now. SRS Rocco report. Now, this is old. This is from the beginning of the month, September 3rd. The silver price has never closed above 40 on a quarterly chart. $40 is an important level not hit on a quarterly basis since 1980. A close above 40 by the end of September and quarter could suggest even higher prices. So let's take a look and explore this a little bit. Here, I'm on stock charts here. And so this is a daily, and it's a line chart. And here's the thing about line charts is line charts on stock charts is basically connecting the dots of the close price. It doesn't have the intraday information in there. It's just the close. So if we select daily here, that's what it looks like. But then we go to weekly. Still looks very similar. 44.05 is what stock charts says that silver closed at. But you can see this cup and handle, even on a weekly, is almost done. It's almost completed. But now let's go to a monthly. And what we see is that it's almost very close. The cup got tilted a little bit. So the intra-month price action is not there. Now, if we scroll down, we go to quarterly, and bam, we have had a major breakout on quarterly. Let's take a look at yearly because this had already broken out before. And there's yearly. We have major breakouts on the yearly and the quarterly saying that this cup and handle is going to be accelerating. This cup and handle suggests 3-digit silver. So it is not too late. We're probably headed up into mid 3 digits. And if we go back to the daily, this bottom down here was, I think it was $3.50. So the difference between $3.50 and these $48 highs, you've got to at least flip this upside down, and that is the minimum. But this is on an exponential chart. If you flip it upside down, it wouldn't just be adding that $47 or whatever this is. It would be far, far beyond that on a logarithmic chart. That's probably where it's heading. So from VBL's Ghost, the only silver chart that matters is the annual close. The lid is off, kids. And this is a great chart because it goes all the way back into 1802. And you can see the super spike in 1980. And we are going to be headed for a bubble far greater than the 1980 bubble. The economy wasn't in such dire straits back in 1980 as it is today. Everything is far, far more out of balance than it was back then. Coinstacker says, cup about to runneth over. And I was one of the very first people, I think the first one, to identify this giant, everybody was focused on this cup and handle right here back in 2023 because it was suggesting a big move coming. And the big move, I kept on calling it a slingshot move. These green candles here, that's the slingshot. But then I accidentally looked at a 50-year chart and I went, oh my God, look at that. And so we are headed for some big, big all-time highs. And just one thing to wrap up here, silver has been marching forward and creating a 14-year high after a 14-year high. And here we closed above $44. Quite amazing. From just 2 years ago, it was down in the 20s. So we've doubled in 2 years pretty much.
Silver's trajectory is no longer a quiet story confined to contrarian circles. It's a market transition gaining recognition from institutions, investors, and physical buyers alike. We are witnessing a convergence of forces that rarely align simultaneously. On one side, supply remains under immense strain, with miners struggling to bring meaningful new production online. On the other hand, physical demand is intensifying, especially from Asia, where premiums continue to attract supply flows out of the West. This persistent eastward migration of silver is reshaping the market balance, setting the stage for a revaluation that can no longer be ignored. Add to that the structural changes in Western financial circles. Banks that once dismissed silver are now revising their forecasts upward, openly acknowledging what independent analysts have been signaling for years. When the most prominent players move from doubt to conviction, it leaves smaller investors with a narrow window to act before the next leg higher takes hold. Technically, the breakout structure confirms this evolving reality. Silver's long-term charts are showing strength across multiple timeframes, signaling that we're not just in a short-term spike, but potentially at the beginning of a sustained repricing cycle. This blend of fundamentals and technicals is rare and powerful. Share your thoughts on their analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.